Hello everyone, welcome to Betty Academy. This is a channel where we make school easier, and if these are the kind of videos that you'd like to watch, kindly support our channel through subscribe to this channel, like, share, comment down below, and don't forget to hit on the notification bell. So in this lesson we are going to learn about ratios, and we are going to do it using an illustration. So let's go through together this particular illustration. This is where I'm reading. The following information relates to Kamau Limited financial status for the year 2021. We have profit after tax 30 million, total dividend for the year 18 million, market price per share 20 shillings, number of ordinary shares 6 million. Required, using this data, determine the following investor ratios and explain their significance. So 1, we have earnings per share, EPS, 2, dividend per share, 3, price earnings ratio, 4, dividend payout ratio, 5, dividend yield. So the first thing that you need to know is the formula, and I have the formulas down below. These are the formulas. You have earnings per share, it's the net income minus preference dividends over average outstanding common shares. We have the DPS, this is dividend per share. Sorry, it's you get it by getting the total dividends paid out over a period minus any special dividends, then you divide by shares outstanding. 3, price earnings ratio, it's the market price per share over earnings per share. So dividend payout ratio, it's total dividends over net income times 100. Dividend yield is equals to dividend per share over market price per share times 100. So when you look at the first one, which is earnings per share, we have the formula right here. So the solution will be, when you look at whatever we've been given, we have the profit after tax, but here we are saying net income minus preference dividends. Now that we don't have any other information, so you will take it as the net income, so over average outstanding common shares, and this is how you work it out. So this is it. We have the first one, which is the earnings per share. You have it, the 30,000, which is profit after tax, over 6 million, which is the outstanding shares. You get 5 shillings. Then you go to the second one, which is dividend per share. Dividend per share, when you look at our illustration, we have the total dividends that was paid for the year, which is 18 million. So minus any special dividends. We don't have any special dividends here, so you'll have it as 18 million, over 18 million divided by 6 million, which is 3 shillings. Now, then you go to the third one. That one is price earnings ratio. Price earnings is market price per share over earnings per share. So the price earnings, we have the market price per share, you have it from the illustration, is 20 shillings, and we have the earning per share, which is 5 shillings. We had already calculated it up here. So you will have 20 divided by 5, you get 4. Then now we go to the other one, number 4, dividend payout ratio, which is total dividends over net income. So here we are interested with a portion of dividends that was paid out to the shareholders, and that's why we have what? We have the total dividends, and you realize that the total dividends is 18 million, but the total profit that was made was 30 million. So meaning this is the only portion that was paid in form of dividends. So the difference, which is 13 minus 18 million, which is 12 million, that is the retention ratio. So you go to dividend payout ratio, which is total dividends over net income times 100. So you have it here, 18 million divided by 30 million times 100, you get 60%. So 60% of the net income is what was paid in form of dividends. The difference, which is 40%, the remainder is what was retained. And you know, retained earnings is also used for future reinvestment. Then you go to dividend yield. Dividend yield, we have the formula here. It's DPS, which is dividend per share over market price per share. We have the market price per share, but here we had already calculated our dividend per share, which is 3 shillings. So you'll have it as 3 over 20 times 100, you get 15%. So that's how you you work out ratios. So that's the end of our lesson. Kindly watch out for our next video, and don't forget to subscribe in this channel. Yeah, it's going to help this particular channel in a great way. So until next time, bye.